So here we're going to be exploring a potential trade setup that I'm monitoring. I'm looking at trading the Aussie US dollar to the downside. Okay, and I'm going to explain why. Okay, so first let's apply our 5-pillar approach. So let's grab our Fibonacci tool from this high, top to bottom, to the low, like that. Support and resistance. Somewhere in this area. So around this area, as you can see, we've got a bit of congestion from previous price action. Okay, so what we're going to be looking for is we're going to be looking for this price here to push up towards resistance and then hopefully bounce off the resistance level or this area around here and then produce something like a a bearish price action candle or an indecision candle of some sort to show that the bulls are becoming exhausted to break through this level. Now we're also I'm actually bearish on this pair, so that's why I haven't been looking to any breaks to the upside. All the data that's been coming out of Australia it's I wouldn't say it's terrible, but the Reserve Bank of Australia had cut interest rates yesterday, and as you can see here in this previous candle, as it was yesterday's and we're on the daily chart, there was no mention in the RBA statement of any further cuts. Although, as Australia has a mining industry, it's going to have to lower its dollar to make it more competitive. With the rest of the world, its main export is iron ore, but it's going to have to end up cutting its dollar, but it's facing a few problems with house pricing and whatnot, and the fundamentals, and it's versing the US dollar, which the data out of America hasn't been too bad in recent times, and it's going to be looking for a rate rise between June and September. Well, that's what the markets are telling us anyway. But there's a lot of volatility around the US dollar because because of this event. It's going to be the first rate rise since the GFC in America. So what we're doing is I'm waiting for this to push up, present a bearish candle or something that I can trade off or find an entry point. I'm going to post another video as this moves along, but this is definitely a trade to watch, and we want to see a break to the downside, and then we can place our stop up here. I actually already got into this trade, but what I did is because of I was watching the obviously RBA rate cut as it took place, and when I was watching the rate statement, I was looking for the RBA to mention a further rate cut or further room to move for further rate cuts, but there was no mention. As you can see, I took my position out, and the bulls obviously broke to the upside. And we also have non-farm payroll this week, which is going to play on this pair. So the market's probably going to push to the upside. Possibly people taking out their long positions on US dollar, and this may be pushing it to the upside. I can't understand. There's nothing in the news in this present point to be pushing the pair to the upside, besides the fact that the RBA didn't state any further rate cuts. So let's wait for this to come up here and present something for entry. I could also be going back to the 4-hour chart to look at support and resistance if I want to really find an entry and I want to get into that market. This is going to be through risk mitigation, or I'm calculating my risk. I'm going to be calculating the full 2% of my account on this one if it produces what I'm looking for. I'll definitely keep you updated. If you have any comments, post them in the comment section, and don't forget to subscribe.